The most common retirement plans are defined benefit and defined contribution pension plans offered by employers. DB pension plans are administered through your employer, and the income you receive in retirement is calculated by your salary and number of years you contributed into the plan. With a DC pension plan, you decide how much to contribute into the plan, and your employer will match a portion. You may have some choice in deciding how your funds are invested, and the amount you receive in retirement depends on how your plan is managed and how well the investments perform. When you retire or leave an employer, make sure that you review your options with your advisor to determine if it makes sense to transfer the assets out of the employer plan and take control of them. You can open a registered retirement savings plan or a tax-free savings account through an investment firm or a bank. When you contribute funds to an RRSP, you receive a tax deduction, and the funds grow tax-deferred until you withdraw them in retirement. With TFSA, you contribute after-tax dollars. The money grows tax-free, and you pay no tax on withdrawals. To find out more, call us today